how can I structure the investment fund to get the most benefit at the tax level?
Whenever you are dealing with foreign partners and you want to avoid taxation to the foreign partner, this is only for the foreign partner, because remember, for US citizens, they have to pay taxes, yes or yes. There is no way to, if you are a US citizen and you are dealing with investment, there's no way to avoid taxation. You can defer taxation, but you cannot avoid it. But for foreigners, is a little more complicated, because as I said before in the other question, they are going to be taxable at the 30% every quarter from the profit, not from the income, from the profit. Now, if you want to avoid or shield your foreign investor and investment fund from that withholding, you need to go offshore. You need to open a fund, an investment fund, that is going to be an entity in Bermuda, for example, or in Cayman Island. Cayman Island is very famous and is very prestigious for this kind of a structure. You open a structure in Cayman Islands, and it is the Cayman Island entity, the one that is going to do the investment in your investment fund in the USA. You are not going to make your foreign investors partners or the investment fund in the USA, because that causes taxes. You better place all of your foreign investors in Cayman Islands. And then the entity that is formed also as a fund in Cayman Island is the one that will receive the funds from the foreign investor, and that entity in Cayman Island is the one that is going to invest in the investment fund in the USA. Because of that arrangement, your foreign investors are going to be shielded from tax liability in the USA. So that's how you balance and you minimize the tax liability for foreign investors. Remember, but this doesn't work for US citizens. It's only for foreigners. US citizens, either they go to Cayman Island or to any other country, it's the same because they have US citizenship.